So if you were asleep under a rock last week, the Federal Reserve increased interest rates by another quarter of a point, which in turn led to Robinhood increasing their cash return to a record 4.9% to gold account holders. Today, I want to show you why you can never get 4.9% from Robinhood, but with one move, get nearly 20% more without being a Robinhood Gold member. Hey folks, Tom Gentile here. First of all, three things. Number one, I'm not a certified public accountant or a tax accountant, and I offer no tax advice here. Number two, all the numbers I'm about to share with you are from my own research, so double check my math. And finally, number three, the reason I'm talking about this subject is because I don't trade 100% of my money in options, and I think someone would be crazy to do that. I diversify. And if you do too, then this subject should be of interest to you. So, like I said before, last week, the Fed raised rates once again. They took borrowing costs to highs not seen since 2001. Currently, the target rate right now is 5.25% to 5.5%. All of this, and Jerome Powell indicates that rate hikes still may not be over, even though the market may seem to think so. But I believe the talk around the remote water cooler has to do with Robinhood and their recent move to boost their interest rate up to 4.9% on cash. They claim it's 8%, or 8 times the annual savings account rate. Now, looking at some banks, they're probably right. Doing some quick research, Robinhood offers the most returns on cash of any broker. But what's the catch here? Well, the catch is you have to be a gold member. Gold membership at Robinhood costs $5 a month, but it offers a lot of perks, including instant deposits, professional research, and even real-time data. But the biggest perk is the interest that they pay on uninvested cash in a gold account. So if you don't have gold, you don't get the interest. But if you do have gold, that's what's hanging that 4.9% interest rate like a carrot right in front of you. So your account's making money on the cash you have sitting in it. Being a gold member is as easy as a few mouse clicks from your account. But the real question is, to those of you that want the interest payback, is being gold worth it? Well, that depends. All right. One question we ask as traders all the time is, what's the risk, what's the reward, and what's the break even on a trade? Well, guess what? The same holds for investments on cash. In this case, how much do you want to have in cash each month to get the least amount that it offers for membership? Well, there's an easy answer for that. So I want to put a couple of things up on the screen for you. First of all, you take the $5 a month that it takes to be Robinhood Gold, multiply it times 12. That means it's going to cost you $60 a year for Robinhood Gold on an annual basis. 4.9% interest to cover $60 a year means you need a cash balance of around $1,225. Everything above that is what you call your net interest income. So once again, anything above $1,225 is return. Anything below that number is risk. Here's another way of looking at it when you apply it to different cash on deposit balances. So if you have $2,500, that's going to return $122.50 at the 4.9% level. Take out the $60 that's going to cost to get that 4.9%, and that gives you a $62.50 net gain. That's actually only a 2.5% return. $5,000 is going to return $245 minus the $60 annual Robinhood Gold fee. That nets you out to $185, which is a 3.7% return. $10,000 is going to return $490 over the course of the year, but you're going to pay $60 for that $490. That nets you $430, which equals a 4.3% return. So keep in mind that even though you see the 4.9%, it's not really 4.9% because you have to pay to get in the club to get the 4.9%. In fact, you would need a $100,000 account with Robinhood just to tie with the second place broker, which by the way is Interactive Broker. They return 4.83% annually on interest income in their cash accounts. So I'm not saying these are bad numbers. In fact, compared to your average bank, they're actually pretty good numbers. But what if I told you that you could get better than 5.25% on your money and you didn't need a gold account to do so, or even a Robinhood account for that matter? All right. Introducing SGOV. SGOV is the iShares 0 to 3 month Treasury bond ETF. Now, this thing just moves up and down every single month. It starts out the month as a low number and ends the month on a high number. Then it drops at the end as the month changes, right, and starts the process over again. Now, that drop, what happens is, first of all, keep in mind that this is a Treasury bond ETF, all right, trades in any equity account. SGov tracks the weighted index of the 3-month treasuries. It's as close to investing in 3-month treasury bonds as possible without having to use the hassle or go through the hassle of treasury.gov auction website. Now, look close at that chart again. You see those swings? Those are about 40 cents on average on a $100 asset every month. A novice trader might think they got a pattern here and that you're going to buy at the beginning of the month and sell at the end of the month, but it's not what you think. That drop each month is a reset. What happens is that interest gets dropped into your account as interest income from this ETF. The ETF starts over again and then runs itself back up. So there's no real advantage to buying low and selling high here. In fact, if you do that, you might end up losing a little bit on commissions and slippage. Couple of key statistics about SGOV. First of all, it's got $12 billion in assets, so it's very liquid. According to Robinhood Gold research, that's an annual yield of around 5.32%. That's as of July 31st. Now, you got to take out the 0.13 expense ratio, but that still gives you a net return of 5.19%. And that's with no Robinhood Gold account. Now, folks, these numbers are always a moving target. If the Fed raises or lowers its target rates, it's going to affect an asset like SGOV. So keep in mind that you have the flexibility to buy or sell at any time. In my mind, that makes this a very big benefit. Let me know your comments about how interest rates are affecting your account. Oh, and before I go, can an option trader do something with this yield? The answer is yes, but for a detailed answer, you're going to have to wait till next week. And I'm going to discuss next week how to use SGOV to create risk-free trades. Again, risk-free trades. Is it possible? You're going to find out, but you're going to have to wait till next week. I'll see you then.